Hi everyone, it's Izaak de Winter from Bentleys, Tasmania, here to highlight some of the key takeaways from the 2025 federal budget, which was delivered on the 25th of March 2025. Now, before we get into any detail here, this is a general presentation. If you have any specific questions regarding the following content, please reach out to your local Bentleys advisor. They'll be more than happy to assist. What were the budget headlines for 2025? Dubbed the cost of living election, it's a budget that has election written all over it. We saw modest tax cuts for every Australian taxpayer and boost to Medicare and childcare. Some of the headline statistics that I'll just run you through. The national accounts have fallen into the red for the first time since 2022, with a $27.6 billion deficit. Now, that deficit is $700 million worse than was forecast 3 months ago in the mid-year economic and fiscal outlook, but an improvement on last year's budget prediction, which was $28.3 billion deficit. Now, onto wages and employment. Treasury expects wages to rise by 3.25% and unemployment to cap out at 4.25%. Treasury expects inflation to remain in the Reserve Bank's target range for the next 3 years, which means real wages are forecast to grow by only 0.5% by the end of the current financial year. Now, Treasury expects GDP growth set to hit 2.25% in the 25-26 financial year. Now, there's cost of living relief in this budget. Every Australian household will get $150 in energy rebates through their bills in the second half of the 2025 financial year. And of course, there are tax cuts for every Australian individual taxpayer. We'll now focus on the impacts to our client tax returns, both individuals and small businesses. So what impacts will the 2025 federal budget have on your individual tax return? Well, as I mentioned previously, every Australian will get a new tax cut. A worker earning an average salary of $79,000 will pocket $5.15 extra a week, or $268 a year in the 26-27 financial year. That increases to $10.30 extra a week, or $536 a year in the 27-28 financial year. This is achieved by adjusting the lowest marginal tax rate in the 26 financial year. That lowest bracket will reduce from 16 cents to 15 cents, and then in the following year in 2027 from 15 cents to 14 cents. The Medicare levy low-income thresholds will be increased. More than 1 million low-income households and seniors and pensioners will continue to be exempt from paying the Medicare levy or pay a reduced rate. A single person can save up to $122 a year for that. Some big announcements in there for tertiary students and Aussies with HECS debts. University graduates with a student debt will have a 20% debt amount wiped from their loans, saving someone with an average debt of $27,000 about $5,500. The salary threshold for compulsory repayments will also increase from about $54,000 to $67,000. So those repayments will kick in at a higher taxable income going forward to reduce the repayment requirement for those graduates. Already law indexation rates for help debts are now calculated at the lower rate of the CPI or the wage price index. So what impacts will the federal budget have on your small business tax return this financial year? Support for small businesses across the board was very scarce. There are a few announcements in the budget that will be well received. Small businesses, around 1 million small businesses, will benefit from the extension of the $150 in energy bill rebates to be received before the end of this calendar year. There was a Buy Australia program announced for Australian producers to benefit from a $20 million advertising campaign to encourage our consumers to buy Australian-made goods. Tradies and apprentices received some support through the budget. there was a $10,000 incentive for completing training programs for related fields such as construction, carpentry, joinery, and brickies for those apprentices out there. And there's also some hiring incentives for employers in similar fields for $5,000. Now, that scheme has been in place previously, but it's been extended for an additional 6 months to the 31st of December 2025. Now, some announcements that were made before the budget but are relevant for our small business taxpayers. The ATO is continuing its crackdown on debt collection. The government announced that it will amend tax law to deny deductions for interest charges. And probably one of the biggest surprises in the budget is that the small businesses are going to miss out on an extension to the $20,000 instant asset write-off, which had been given a reprieve in the 2024 budget, but didn't make it through in the 2025 budget. So that wraps up our key takeaways and impacts for our clients' tax returns, both individuals and small businesses. If you do have any specific questions regarding the presentation or need to discuss your current tax planning or advisory needs, please reach out to your local Bentleys advisor and we'll be glad to assist. Thank you.